and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Thursday. Happy post-Fed day. Let me get the screen up here. All right. So P&L is looking good. Markets are higher. I was a little disappointed in my SPY trade because I was shocked. Let me just walk you through this. I closed out this morning. The trade that I posted yesterday, it was a 569 long call. Let me walk you through the life of this trade. So here is the SPY, and I placed the trade yesterday during all the chop. I saw this really nice gamma level at 570 yesterday. So I took a long call. It was a 569. So a 9:20 expiration, which is tomorrow. It was a 569 long call. It was $1.50 to $1.55 debit. Okay, that was the trade that I took in here. Now, when we came into FOMC yesterday, we had that fat finger buy trade, which not fat finger, just order flow jumped right out of the gates, and then we faded the entire move. At the peak right here, this trade was up to around $3.25 credit. Now, I didn't move the stop loss. I didn't protect profit. I didn't go to a break even or better. Had I done that, I would have been knocked out pretty early. And this was trading for about as low as 55 cents. So you're like, Chris, you were up $1.75, didn't do anything with it. You were down $1, didn't do anything with it. And then what about today when it's at higher highs? Yeah, I thought I'd be back up here towards $3 plus. When I got into live market today and it was opening bell, it was trading for about $3.10. So I was a little sad that being higher than this high by $1.70, $1.80, and I'm getting less overall premium, pretty disappointing. So I ended up moving stop losses. I got one filled at $3. I got one filled at $2.75, and then I had several other accounts filled at $2.55. So overall, it's still fine. I mean, the return on capital is fine, but crazy that time absolutely works against you as a long option trader. So that's why I typically sell options, but I thought it was a good trade. Still worked out. I shouldn't complain that much, but I thought, man, what a good move. Frank and I actually talked about it offline. Like, hey, your 569 long call should be looking good. I thought, yeah, I'm hoping I can get like 350 out of it. I thought it'd be better than what we traded for yesterday. With, we have all day today, all day tomorrow. I thought there's a little time premium still left in it. But as soon as market opened, it was trading around 310. So, and it's probably still trading for less than that right now. Let me look at it. So the 569 out to tomorrow is trading for 267. So it's right there. Like, it's not even back to $3. So anyway, the trade's done. It is what it is. P&L for the day is doing great. I'm up 26 grand, 25 grand. I'm just going to do some spot checking today. I'm a little skeptical of this high. And I'm not like bearish. I mean, Frank might be pulling in some bear call spreads and stuff, and that's totally understandable. I'm a little skeptical for a couple of reasons. I did some digging this morning and found a couple of interesting stats. So after the market's reaction, stocks initially soared alongside gold, bonds, etc., before reversing during Powell's press conference. Now, of course, that's after the press conference. The reality was overnight, the futures market was really, really high. This was the Nasdaq futures overnight. So here's if I box this in, this is the Fed noise from yesterday. And you can see that pretty much after the market closed, it's like, yay, we're going up. And the futures market ripped higher all night. And if you're a futures trader, great. But it's not the normal time to trade. It doesn't matter. I mean, it's up, right? So we're looking at 2+% in the Nasdaq today, 1.5, 1.6% in the S&P, and everyone's like, awesome, we're at all-time highs again. But it all happened overnight. So here's the Nasdaq, here's the S&P, here is the Dow, and here's the Russell. All of them just like completely shredded those highs after the market was closed. Um, I thought this was funny. This was actually the July 31st FOMC, and then just some, some red updates and slight tweaks and modifications, because it's pretty much the same thing that we had July 31st, but now we just modified a couple things for September 18th with the report in the Fed. We sat here and did it live yesterday. We watched it. It was an immediate reaction, and then everything else was pretty dead. It faded most of the move all day. But here's what I'm trying to take away from it. I'm a little skeptical of the high, because the last time that we had 50 basis points as the first cut, the market actually underperformed. So if you look here in blue, the 0.50 first cut, this happened back in 2001. This happened back in 2007. I know that's only two instances, but the market was lower with the 50 basis points cut. I also shared this week, and we talked about this yesterday, the average moves over the 1, 3, 6, and 12 months when the Fed cuts near all-time highs. Now, I obviously don't know how the market's going to be in a month or 3 or 6 or 12. If I did, we'd be 100% invested and we would have a guaranteed trade, which we never do. So it's obviously risk I'm trying to manage. I like the upside because it makes things easy, but I'm taking stabs and protecting the downside just in case something gets stupid. So sitting here yet again at all-time highs, gapping higher, futures market working all night. I mean, I will take this all in stride. I understand that a year from the Fed cutting at all-time highs, 20 out of 20 times the market has been higher 12 months after that cut. Okay. I could see us higher, for the next 3 to 6 months as we get into the end of this year, maybe get into next year, to follow those typical seasonal flows. Um, but I'm a little skeptical going into like the second half of 2025, simply because I don't know if we have the employment or the inflation to truly go the direction that the Fed wants it to go. The Fed says, we're trying to target 2% inflation. They stuck to that narrative yesterday. Powell was very explicit, closer and closer to 2%. I really don't think we're coming anywhere near 2%. I think that we will have inflation be sticky, maybe in the low twos if we're lucky, but I don't see inflation going much lower than that. I don't know. We'll find out. But if the market senses that, the market senses a flare up in inflation, the market will react. We'll see the stock market react aggressively. If employment data over the next 30 to 45 days before the next the November Fed meeting, if inflation data is better or employment data is softer, the market can obviously have adverse reactions there too. It was highly sensitive through July. It was highly sensitive from July to August when we had that, the carry trade unraveling in the end. We had a dispersion trade unraveling as well, and deleveraging. All these things were taking place. But right now, the market seems to have forgotten about it, and we're back up here to all-time highs. And it seems to be like the market can do no wrong. So I'm not trying to fight it. I certainly like watching my P&L grow. Um, I wish I could just be happier and let it do its thing. But I'm not super aggressive. I'm just going to go through my portfolio today, and that's really what I'm doing, is kind of pruning and combing through and making sure, like, what else can I do. So oil's up to 69. So my 65 and 64 positions are good. I've got like a 112 on oil, as well as some credit spreads. My ES feed, this is going to be down because that was a hedge that expires worthless tomorrow. I have also out to next week, I'm doing that broken wing butterfly with the call side. I want to see if that, that should be it's a good payout potential. But I'm looking for a vol play on the S&P, the Qs, and Nvidia. Gold 26 27, we're up to fresh highs again on gold. What a reversal that would have been. And of course, I'm watching direction here. Let me check on my SPX trade really quickly. SPX this morning, right here. Yep. Okay, just going to keep an eye on that. All right, let me put this away. Let's talk charts. Let's go to the daily. We'll take a look. Yep. So we are sitting here, gapping higher, fading to hit the FOMC high from yesterday, and then pushing higher. We're at 571 and change. Now I want to see what the SPY is trading for, you son of a gun. SPY right now for 520.
Hey, Chris.
There it is. What's up, Frank? Now it's freaking moving, dude. Now my 569 is trading for 340. You freaking turds. So bummed.
How's your call going?
It's
You said
I
it's at 340 now?
Yeah, 340 right now. I mean, it was as low as 240, 245 today. It was when it opened up. I thought we'd be much higher at the open since we were up to like 571 near the open today. The highest price I saw bid was around 310, and it faded, pretty quickly from there. But again, in hindsight, if I wanted to move a stop loss to break even and go to like 165, 175, now I'd be up, you know, 100+%, and I could just sit here and manage my stop loss. But I closed out around $3, and then I had one account that closed out at 275, and then a bunch at 255. So I grabbed anywhere from like $1 to $1.50, which return on capital wise is fine. It's like 80% return on capital, 100% return on capital. I'm fine with that. But now all of a sudden it's like, oh yeah, there it is. There's the move I was looking for. And I mean, this is what's stupid to me, dude. How do we not have? We're barely above. We're barely above the opening price, right? Like we're barely above the opening price. And the difference is this was trading at 310, and later in the day it's now trading for 350. Like you think that time premium would actually matter with that gap higher, but whatever, man. I'm just bitter. So
Well, does that mean that they're expecting it to move harder now,
I don't know.
even harder than this morning? Because how would that
I mean,
work then? Because you're
I
paying
think
for the premium.
Yeah, I mean, I paid for the premium. What we're getting now is we might just have like, since prices moving up this way, we might have like a gamma squeeze going to the upside, and might just kind of help improve the value of the trade. But I just thought with time, obviously getting time at 9:30 open versus 10:30, that we'd actually have the value be a little bit better. Whatever, dude, it doesn't matter. I'm not going to sit here and beat this up. It's like I'm out of the trade. But the good thing now is if anybody in my Discord that I posted for our trade signals. I put option one is you look to close it at the open, take your profit. Option two is you move the stop loss to break even or better, and then just look to manage the stop loss. And it's so far option number two is working. But having said that, as Frank and I are on here for the last 30 seconds, this has also dropped about 30 cents. So it's going to be sensitive. I mean, I'm out of the trade. So if I had this thing at $1, I bought it for $1.55. If I was going to say in a perfect world, if I just move my stop loss, so this is where my debit's here, okay, and then if I go to let's say I move my stop loss to $1.75. So if I move my stop loss here, I still have to realize like I might only walk away with 20 cents profit on this trade. So if I moved it up to, let's say, $3 and get it locked in, I'd like to see it, but I know it's sensitive. I mean, this could easily drop back to $3. This might somehow rip higher, but whatever, man. I'm not chasing it. I'm doing some other exploring today and some other stuff. So Frank, what I thought I'd be doing is I'd like to talk through some stuff with you. I'm just going to be kind of pruning and plucking and picking. I want to check on a couple of things today. I do have some expirations I need to be mindful of. Baidu. We're at 86, and I think I have a 90 by 80. That's a credit spread that I might be taking additional assignment on. I want to own more shares of Baidu, and I'm totally good with that. So let me just double check on my accounts here for Baidu. Let's go here. So if I go each account,
I have some ideas today.
okay, I want to hear those ideas. Let's
Looking
go.
at
I'm gonna go ahead.
looking at SPX. So
Okay,
what are we up today? We are up almost 2%. A 2% move would be around 57.30. So I'm eyeing the 57.40 level for the day and seeing where price ends up midday.
okay,
So if we sort of run this far up to the upside, I'm thinking we could be capped there, at least for the day. So I'm debating on taking some like selling credit spreads up there, letting it expire. That's what I did yesterday.
okay.
Some credit spreads pretty late in the day. I was surprised I got them filled, and they changed pretty drastically, but ended up working out. Selling the volatility yesterday was good.
Yep.
And I'm glad that I didn't go till tomorrow. because that would be today, and we completely, we broke out of every level,
Right.
hitting all-time highs. I think the market's excited for a better jobs market now that there's 50 basis point cut. I think maybe they're pricing that in now. So I don't know. I'm looking at stocks and wondering, like, so I think upside is limited, but then we jumped almost 2% today on the SPX.
I know. I know. I mean, it's up. I mean, the futures market ripped all night. I mean, the Qs are up almost 3%. Nasdaq 2.83. It's like, okay. I mean, look. That's what I'm saying. It's like I shouldn't be upset, and I'm not. But it's like I'm just skeptical, And so
Yeah.
I'm so exhausted of like I gotta be. It's like I'm not bearish. Okay. All I'm doing is that's like I think it is in my best interest to take very inexpensive hedges, just because if something silly happens with this market, like flinching, we could have a 2, 3, 4% down day. We could have a 3, 4, 5% down week. We've seen it. We saw it, the 10% dip to the downside from July to August. We saw it from post Labor Day. I mean, the end of August to that post Labor Day drop was 4.5%, 4.25%. So I mean, we know the downside can be there, but what always ends up happening is also momentum begets momentum, and there's probably more buyers at these highs, and even if it feels like the risk is to the upside, not to the downside, the risk is to the upside because it's like, how much higher can we stretch? How much frothier and rich can these valuations get? We're not even through earnings season right now. We might have another, Q3 earnings might still prove to be like really profitable, and margins might be good. Forward guidance might be better. The landscape might change. Think about the optimism that these earnings reports and transcripts might throw into the markets. They might be so optimistic that the Fed is finally cutting that it looks better for them. And all of a sudden their forward guidance is up. And like, dude, this market might go into pure euphoria. And it doesn't matter about the election. The employment data comes in. As you said, if it just improves, the market's going to take that as a positive, and inflation's trending the right direction. And yesterday with Powell, it's like he was pretty vocal on like, hey man, inflation's going the right direction. I think that they right now they get some free mileage out of inflation talk because it has trended from 2.9 to 2.5 is a big leap in the right direction. I still don't think we get sub 2. I don't think we get sub 2. I think we're gonna stay if we get to like 2.4, 2.3, 2.2, great. But I don't know, man. I think the market is going to sniff this all out later, not now. I think right now it's like it's too good. It's too good to fight it. Um, but it doesn't come without knowing that there's some serious downside risk in case something turns sour. So, like I said, I'm just trying to stay out of my own way. Obviously, I'm up, nearly $30,000 today, and I'm like sitting here being a curmudgeon, like, oh, whatever. But it feels weird, and so it's fine. Like, that's what I'm saying. I'm not trying to do anything bad. It's like I might have a couple stocks getting called away this week. I get a sign on Baidu. That's fine. I want to own that. China's come back in a pretty nice way. China is finally showing some signs of growth, which is nice. The HSI is up 6.15%. Go to KWeb. This thing's up off the lows as well. This is a large cap tech that's up 8%. Go to FXI, which I own some shares. We're up here at 26.98. I think I'm getting them called away. I actually going to check this right now. I might actually roll these. Let me go to FXI for a moment. I might roll these because I do have them. Oh, it's out to next week at 27. So I'm right here at the call at the level. I'm only in for 100 shares, so rolling this isn't a big deal. But I think I own my shares. I'm going to repair this for maybe like $3 or $4 a share. So I'll make a few $100. I'm up like $4,000 right now in FXI, and I'm fine to keep that. If it gets called away next Friday, that's okay. Actually, it's on Monday. It's a Monday expiration for that covered call. And then I have a naked put out there for one of my accounts as well. And then what else do we have on? So my China stuff, I've got some Baidu and Baba. Baba, I have a 250 by 80 credit spread. That all expires for profit. I'm up about $9,000 on Alibaba with a lot of these credit spreads expiring. I also have 65 by 40s wide credit spreads collecting, $2, $3 a credit. My long calls here, let me check here. Long calls at 60. These are out to March of Q1 of next year. Let me take a look at this one. Let me just go into one account
I
on
think I might have another reason to hedge too, at least
another
in the
reason to
short term.
hedge. Okay.
So
Debits,
tomorrow
debits.
is the
Yeah,
triple witching.
it is the triple witching. Thank you for reminding me. That's the
Um,
dose of reality that I need. Yeah.
I don't know if like obviously the market is defying everything. I mean, look at this. It closed down at 56.15. It opened up at 5,700.
Yep.
That's I don't know, almost 100 points or something
It's
like
a big
that.
move, man.
So I know, like, I'm always cautiously, I guess, bullish. I always sound like a bear, though. But I do think that if we go overextended like this in such a short time, it could be euphoric. But we have like, what is Monday too? We have triple witching tomorrow, and then Monday is something else.
Next Monday shouldn't really be anything. It would be the following week is going to be the end of the quarter. So if we get through triple witching, we just have 1 week. I don't think there's any major new next Monday. If we go
I think it's
to
got to be at least like some limited volatility to the upside, at least for the rest of the week.
yeah, we have PMI. All we
Um,
have in the U.S. is PMI data coming out on Monday. It's services and manufacturing PMI at 945. We have Eurozone PMI as well. Rate decision out of the Aussie, but I don't see anything Monday. But the following Monday, the 30th, is going to be end of quarter. So 27th is the last full trading week of September. The 30th is end of quarter. So I mean, I don't know. I mean, what I would say is I noticed some interesting things. Like anytime we've seen the market start out rough, this is kind of interesting. So you mentioned that triple witching tomorrow. Um, I think this goes back to 1980. Anytime that we have seen the market start off September red within the first week, 10 out of 10 times in history, it is finished red. So I do wonder, like, this might look good today, but I do wonder with that gap, it's like, is this ripe for the bears to just come back in and fill? Is there any momentum to the downside to give us, think about this, Frank. We talked about this the last couple of weeks. Wouldn't this be the classic broadening pattern right here? If the market heads up and tops out, and then the market heads down here, we get this big, fake out to the upside. That's why I'm a little
yeah,
skeptical, dude, is I could just see this being a fake out where this is getting everyone to jump in and get long, and the market's just going to turn, even if it's short term. But if it turns and fills the gap and has some momentum to
yeah,
the downside, I could see that. Like this could all be just a big old freaking fake out. So I'm not I don't know, man. I'm not biting. I think it's nice to see the P&L go up and everything melts up higher. If it does, awesome. All I'm losing are like little 0.1s and 0.25% along the way, like every 30 days with hedges. But I don't care because if I'm up, asymmetrically, I'm up 10, 15, 20%, I'll give back 1 or 2% in total to make sure I've got some protection to the downside. So, but you're right.
well, like when we
Tomorrow's going to be
see
an
the
interesting way.
S&P up here, yeah, we see it up here.
Mhm.
That's when it's hard for me to decide whether to buy or not. And I know deep down I want to buy some more. Um, my Oxy, Palantir, SoFi, they're all doing well. I want to buy the S&P right now, but I just have nowhere for it to go. Like I don't have a target for it. There's no
Yeah.
highs. This is the high. So
Yeah.
would I find more probability to the downside is how I'm feeling right now. So I don't know. I think I'm just gonna focus on those credit spreads just because I don't think that we can go that much higher today. And then tomorrow we'll see. But I'm not necessarily bullish on a triple witching day.
Agree. I actually might look at this today. Let me see if I did a SPX. So, and I hate to sit here and say I'm going to call the top in the SPX, but I mean, if we have a stretch, look at just from a sheer percentage, it's like we already have an outlier move. We're already over 1% from yesterday's close to today's high. It's already stretched out about 1.9%. If I can put what's 3% here, I might look at putting like a bear call spread in, go 3%. If we get to 3% today, that'd be a that'd be around 57.85. It's probably trading for nothing today. Let me see, 57.85. I'm going to go SPX. All right.
Yeah, that's like 15 cents.
Yep. So around 10:45 a.m. Got it. All right. Okay. I got to make a note here and something real quick. Yeah, let's look at that. 10:45 a.m. Eastern time. SPX cooperated with the K. All right. So 57.85 on the options chain. Let me clear this. Option chain 57.85. I mean, you're getting nothing for this right now. If I sold the 85, buy the 90. I mean, I'm not going to take the trade for 5 cents. Obviously, I would try to get this thing for maybe 50 cents or $1. And that way, like, price would have all this room to rip to the upside. Right now, it's trading at a 98% probability. This is a 1 delta. So I don't think this is going to fill today, Frank. But if I were to say I'll put in a pending order, probably what I'll end up doing is, I don't know, man. I'm going to turn this into a broken wing. I'll take a silly little trade here. I'm going to be a Bob Ross and take a silly little trade on the silly little SPX. Happy little accidents. Let's do a. I'll do a call fly and move this thing down to 57.85. So I'd like to kind of pin it there at that 3% level. It's not going to fill right now. I'm going to put this as a pending order around $1, and price would have to just absolutely rip to the upside today to get this thing filled, and that'd be a 3% high and a profit trap for me. So if it works out,
what is the biggest day on the S&P?
This year,
3%?
Ever?
Has it ever gone
2%? Oh, dude, like we had like 10% days. 2008 financial crisis, some of those big up days with crazy high volatility. We had some swings like 7, 8, 10%. I think I mean, I don't think I'm wrong. I think we've had some crazy moves. Remember that study where it's like if you were not invested trying to time the market and you missed out on the biggest days, you miss out on. I mean, the performance over those days and years have been insane. But what is the biggest one-day performance for the S&P? This shows that the biggest move ever was 122. Thanks, AI. You guys are stupid. Let me find out. List of largest daily ranges. I don't know. Wikipedia. Maybe Wikipedia has it. Here we go. How about a 16.61% change to the upside? It's pretty big, right?
Okay, but that was in the financial crisis. So when stocks were already tumbling.
They all are. They're all going to be that way. All the big moves are going to be in turmoil and crisis. All of them, right? 1929,
and
1933.
that's what we're not in now.
I understand.
So do you think we're going to even? Yeah, I'm just saying, like, if we go up to 57.30, I just don't think it can go much higher on the day. Not overall, like in general, but just on the day. I don't think today can go past or much past 57.30 because let's see, a 3% move from here, 57.80.
Yeah, that's from yesterday's close. I mean, look, the odds of that getting filled are slim, but I'd rather have a broken wing butterfly than just a credit spread, because at least a broken wing butterfly gives me a payout potential. So I'm going to put the trade in. I'm going to try to get filled. If I get filled for, let me see what 50 cents looks like. 50 cents would give me $50 of tail credit. It'd give me a max profit around $500, but my risk is $500. But I'll see. I don't think it's going to get filled. It'll expire. It'll cancel itself out at the end of the day. So let's find out. I'll try it. So let me throw this in here. And
why not just do like an AM call for tomorrow at 5,800?
Because what if we gap up another 2%?
That's what I mean. Your call would be worth a lot.
Oh, you saying you just want to do a long call?
You just did an out of the money call, a cheap play, focusing on the potential 2% gap up.
I mean, I'd rather do an out of the money put at 561 and see if we fill the gap tomorrow just for fun. That'd be dirt cheap. Not an AM. I'm not doing an AM expiration. If I did I could do a 561 put for tomorrow for 50 cents. I'd rather just trade it intraday. I'm not gonna guess, dude.
You're looking at SPY 561.
Yeah. I mean, I could do SPX, but SPX, not AM expiration, but what's our if we have a gap fill, that'd be 56.15. Yeah. I don't know. I'm up a decent chunk of profit this week. I'm like 7 for 7, 8 for 8 in like income trades this week. P&L's up. No, I don't know. I'm good, man. Like for right now, I think it's more important that I go through my positions. I, pluck and comb and figure out like what I can finesse. Like right now, I know that I can make a lot of extra money on Pfizer. If we get called away, so Pfizer might be worth one more roll. I think I talked about this week. I've got a 10 contract call at 25, and I'm getting it called away this week at 29.50. My overall Pfizer position should be like 17 or 18,000 bucks right now. Let me find out here. Pfizer up about 18.8 right now. So if it gets called away, that's pretty good. Pfizer going into next week. So here's what I'm debating. I'll just walk through this trade really quickly. So the reason I'm even interested in this one is because it's essentially a diagonal spread. I bought the 25 call. I'm selling the 29.50. I've been basically selling and rolling and selling and rolling, and so my cost basis right now is like it's only like $1 and change on my long call because I've netted the debit lower. So if I were to roll this, if I wanted an extra week. If I go an extra week and keep the strike the exact same, I can get 19 cents. If I roll it down a strike, I can actually still get. I'm only going to net like 7 cents more. That's not a big. I'm not going to do that. If I had the confidence that Pfizer could stay above 29.50, which it's a resilient stock, I don't think it's necessarily dropping. But to get an extra $200 and go out for a week, that's not bad. What I'm trying to avoid is, it's up $19,000 for me to just say like another week here, another week here. There's time sensitivity where it's like if Pfizer, let me just take a look at the stock. If Pfizer, which I do believe the stock has room to run, but we're not at highs. Like highs on Pfizer at 31.50. If we're stalling right here, I can always get back in. We're making higher lows. I'd like to see this stock finally start to take off, but I'd almost rather play like individual credit spreads, put in some more ratio spreads, do something different than play with the time factor in my diagonal spread. So anyway, I think I'm just gonna let it get called away. I know I'm gonna take some assignment on Baidu. I think I've got a 90 by 80, and I'm gonna take some assignment, own it around 87, and finesse that trade for a couple of bucks. I still like China. I might be the only one, but I keep talking about it. And then some other plays. What else did I have on my to-do list this week? Let me find out. So here we go. My to-do list for this week. Oxy. I've got to manage some long puts in October. My SPY, Qs, NVIDIA, those are out to October. We didn't have enough volatility on any of those to be interesting yet. So my 562 center up about $8. Let me see if that's got some time premium in it, Frank. Let's have a look-see. SPY. This is October 4th. This one should be in profit. I've got 10 contracts there. Let me see something. SPY. I've got a 565 by 564. That is. Oh, that's the part. Is that part of the? What the hell is this? Oh, that's a debit spread. Never mind. All right. let's go to October 4th. 1, 2, 3, 4. I paid $9.60 for the debit, and right now it is trading for $9.60. Not going to close it. So we might as well rip higher. This trade is, let me close it. Let me look at it. So I took a 40-cent debit. All right, anyway. So that's what I'm doing today. What else do I have on my list? Futures feeds. I've got some hedges mainly on futures. MO that was pulling back after the dividend. We're down to $50.34, which means this is pretty much coming back to all my call levels. I got $50 covered calls, $52.50 covered calls. Pfizer, I've got the 29.50s. FXI is at 27. So maybe I look at potentially rolling one or two of those. The rest is, I added BTI this week, and that's pulling back as well. I'm looking at that's British American Tobacco. It's a dividend play. I'm trading a lot like one of my bigger performers this year was MO, and MO is now $50 instead of BTI being around $37. But it had the same type of growth. It has a similar structure where COVID lows building off this level at $30. I think this is just a good solid defensive play, dividend play. I'm starting to look at some of those boring stocks just to accumulate and get some dividends, play a little bit of defense in case we're, I don't know. I think everything is great. Like this is like the Mike Tyson quote, right? Like everyone's got a plan to get punched in the mouth. I'm trying to duck and weave and make sure that I don't get punched in the mouth. So if I never get hit and the market keeps going higher, great. That's the easiest thing ever, is just to let the market rip higher. But I do not want to take a punch in the mouth where it's like one day, 1 week, one nasty spill that just rattles everything up. And I don't want to do that,
Yeah.
So, all right.
Let me see. I'm wondering if you could, if doing, I guess, a debit spread in the money for like a week out.
For what?
On the S&P.
So SPX?
Or maybe like SPY.
SPY.
And so doing something that's like kind of spread out.
Okay.
Maybe like a 570 by 580 or something for next week. And then
570 by 580.
And then selling credit spreads at 580 for like a couple days out while you're doing this vertical strategy.
So what do you want to do? You want to buy the 580 and sell the 570 or 70, or you want to do like a wide bear call spread?
I'm saying do both. So like take a debit spread, a vertical. So if it goes up, your debit spread makes money, and then have a credit spread at the same time in like a shorter time frame.
I see what you're saying.
So you could go like dailies. You have weekly overall biases it's going to push up because the market can just do that. But in the meantime, you're conservative about how far it goes each day. So you're selling credit spreads a little above price with like daily expirations or whatever. So you can collect premium and then also maybe see a more expensive debit by the end of the week. What do you think of that?
How is it going to stack up if one, like, is it going to be like one side essentially wins and one side loses? Is that what the net result's going to be? Like, so I guess if price is up to 580, if price is down to 560, or if price goes absolutely nowhere, what's the net result of the trades you just threw out there? Because it sounds like a lot of trading for what happens. If price is here, what do your trades do? If price is here, what do your trades do?
So it would probably be a loss if price didn't move, because I don't think you could collect enough premium to, outprice what you spent on the the debit spread, especially if it's 10 points wide.
Mm-hmm.
You're probably going to pay like $4 or $5 for that.
Okay.
So it might be a net loss. But okay, one more thing added to the idea. What if you had out of the money puts as well? So if things, oh yeah, but if
How many
price didn't
trades are we
move,
taking for this scenario? How many trades are we taking?
40.
40. Okay.
No, I don't know. I'm just trying to workshop some ideas.
No, I get it, dude. I'm just, and right now it's like part of my brain is like, I don't need to overthink this. It's like the portfolio's up. I should be happy. I don't want to over hedge and be overly bearish, because all those are is like little paper cuts when the market just doesn't do anything. If the market, look, the market's at all-time highs, there's momentum. Everyone's all excited about these cuts. Look, triple witching is legit tomorrow, and maybe it matters. I mean, typically triple witching is about pinning prices because there's so much order flow to get to certain levels. I don't know what that price is. Obviously, like we blew the highs up today, and we're 1.5 to 2.5% higher on the S&P and the Nasdaq. So clearly, there's no pin price at all-time highs. But I gotta wonder. It's like I just wouldn't be surprised if this little move to the upside, and triple witching might mean squat tomorrow, but what does matter is maybe the end of the month. And if we're up here at the highs, just like we were with August highs, maybe October starts off on a sour note. I don't know, dude. But I think that broadening patterns are really, really great to mess with everybody, because this gets traders so excited to the upside, and everyone just dumps in here, and all of a sudden the market's like bye bye, and it just goes back down, and it shakes all them out, and everyone wastes money at these highs. And like I said, I'm not saying that we have to crash, and I don't think that necessarily we will, but I don't think that a post-Fed gap of 2 to 3% is going to have much continuation to the upside outside of, look, I know 580 was a projected target for a lot of, macros out there and investment banks, and all they did this entire year was raise. Do you know where the initial forecasts were this year when we started the year? Like the
Um,
investment banks for the S&P
no,
were calling for, let me see when we started the year.
was it
So
6,000?
no. January 2024, I think projections were like 4,800 to 5,000 were the projections to start the year. Nobody expected to blow through those levels, and so it adjusted from 5,100 to 5,200 to 5,300 to 5,400. All they do is they're like, well, we're just going to keep moving our targets up. And now it's around 5,600 to 5,800, and probably you're going to see 6,000 if we just keep going higher. It's like they have the ability just to move their targets. If you're trading that crap, it doesn't help. So I'm just like, who knows? But I don't love how we're getting. I mean, look at, we pull back in April, we shrug it off. We pull back in August, we shrug it off. We pull back in September, we shrug it off. But I just wonder, I think this, man, there's a couple spots, rather than me saying like, oh, it's going to be broadening pattern, just connect the dots. Look at the chart right there. If we connect the dots, now this looks a little bit like, I'm going to put this on my chart and do a comparison here. Check this out. So I'll go from this level to this level.
Wait,
Okay.
Chris, we're
Are
over
we out of time
time.
already? Oh my gosh.
Yeah, 11:04.
All right. Nick Phillips, you got to come on at 11:30 now. I'm just kidding. Okay. Russ says, any play on the dollar yen? Did anybody, by the way, this week? I want to, yeah, we do our thing, dude. Really quickly before I go, I've got some trade updates. So I closed out the SPY for a win. I had some Forex trades, also winners. My pound Aussie was a 100 pip winner. My Aussie Swiss was a winner. I put on a new trade yesterday for dollar Sing. And what else? My actually Swiss positions are actually up a decent amount. I'm currently up about $3,700 on Swiss pairs. So with some positive swap. So anyway, the trade alerts are going pretty well. We'll find out. There's more to trade. I'm just staring at profit today. I'm just going to go through the whole portfolio A to Z. That's my job. So, all right, dude, let's do this again tomorrow. And we'll be on time tomorrow.
Okay.
All right. Thanks, Frank.
Yep.
See ya.
All right. Thank you, guys.
Yep. Bye.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Good morning. Good morning. Getting started a little behind here. Chris Pulver and Frank went over. We love it, honestly. I love hearing those guys talk. I think I say that just about every day. Super interesting reaction to the interest rates yesterday. This is something that I covered here on the show, on the A1 show yesterday, was if we got the 50 basis point cut. Let's see if I kept my triggers up. Yes, I did. Okay, so we got this. We got the 50 basis point cut. We didn't get the 3.9% for the end of 2024 or the 2.6% for the end of 2025. That's June. Let's see where it is. Pull up these projections real quick. All right, so for the federal rate, the end of 2024, we got 4.4, which is 4.4, 3.4, 2.9. 4.4, 3.4. It's really all that matters. Let's see how those stacked up. 4.4, slightly above there, slightly below the hawkish tilt. And then I already forgot what it was, 2.9, I believe. No, 3.4. 3.4 is hanging out slightly below the hawkish and pretty significantly above the dovish tilt. However, the 50 basis point cut itself ended up being enough, I think. Let's actually check the unemployment rate. 4.5 and 1.8. 4.5, 1.8 for GDP. So the only thing that actually hit, they increased unemployment rate projections almost to my trigger, and the change in GDP came down slightly, but wasn't at my trigger number. So the only thing that really triggered the dovishness, the dovish side of the trade triggers that I had projected for yesterday, was the 50 basis point cut. The unemployment rate was pretty close to triggering, and then the monetary policy notes were sort of in line with what we were looking at on the dovish side. This is, if you guys remember yesterday, if you were here on the show yesterday, I talked about this dovish reaction. This potential scenario was likely going to do an initial sell-off followed by a rally. Word for word, in the replay from yesterday's live episode, you can go back and play it. This is exactly what I was expecting, and it's exactly how we traded it in my private group. This initial drop happened. I was a little hesitant to try to start getting involved in this up leg because I didn't have exactly what I wanted, which would have been the 2024 and 2025 dot plots showing a bit more of an aggressive approach from the Feds. Because I didn't get that, I was a little hesitant, but I still ended up grabbing a yen trade. It was a quick sell scalp off of this initial push yesterday. So let's drop down to the 5 second, because that's I'm a maniac, and that's how I trade. Actually got in right here, grabbed this little position Price popped up, fell back down, popped up, was down here. When we did a tap here at this area where price had reacted from before, tap twice, tap 3 times, failed all 3 times, did a nice little push, tried to recover, failed, got in right about here, stops above the structure, and got out here at these lows. A real quick trade, and I ended up walking away. I kind of came back later and I saw this setting up and was about this close to taking a position, but I liked the trade I got here. I felt good about it, and so I didn't end up selling out of this zone. I wish I had, because obviously that was the real move for yesterday afternoon. But that trade behind us now, my anticipation, someone asked, anything on yen? Nick, anything on yen? If you had a question about that yesterday, please remind me of what that was, because I'm still, my stance remains the same, that I would love to see yen come down to here. And if we switch over to USD/JPY, I'll show you what that would look like on this chart for the Forex traders. That is going to look like selling out of this 151 to 152 range. So is it going to get there? I don't know. Am I going to try to ride technically UJ up? I'm just going to be riding Japanese yen futures down. Yes, absolutely. I like what happened with the 50 basis point cut and the Doxy reaction. I hope to see continued sustained upwards movement out of the UJ, out of the dollar, I should say. The jobless claims numbers this morning that printed, I think there's a little bit of it's a little wild that we had such a massive surprise in the unemployment numbers the day after the Fed's cut by 50 basis points. You know, to see not that many people claiming unemployment, just got a 50 basis point cut, showing some strength in the labor market. It gives me a little bit of concern for potential upside long term, like over the coming weeks, like I would like to see. But we have more data coming. We have flash PMIs next week, which is going to be a big trading opportunity for me. But as far as the Doxy goes, I still would like to see a significant jump out to the 4 hour. I would like to see a significant bit of relief here. Simply because I do still want to sell the dollar over the next yearish. I think big anything can happen between now and this time next year, but my longer term vision for the dollar currently is something like this. We pull up and then drop off. So I'm going to try to ride this leg back up, and then we get into this area here. Hopefully it gets to that area, maybe it gets to that area, ride this leg back down. Obviously, fundamentals pending on all of this stuff. So it's been a relatively quiet day for me. I took one position on NQ off of the unemployment, the back of the unemployment information this morning. So price did all this funky stuff after the drop. Where's the unemployment rate? Right here. We had sort of the softness out of NQ was surprising following this print. But once we started this rally and pulled back here, I jumped in on this leg. If we drop down to 5 seconds. I can show you exactly the structure. I tend to look for areas of structure at pivotal points of reversal. So price fell into here, came into this zone, and gave my favorite pattern, shoulder, head. It's kind of a lackluster shoulder, but there's a pattern that I like to take advantage of within a head and shoulders situation, where the shoulder, left shoulder will form, head will form, and then maybe this right shoulder won't quite touch the neckline, but it'll come in and it'll hook. I like to think of it as it's hooking. It's retesting this area as new support, and then it gives the shoulder, right? So it doesn't quite come up the neckline before giving the shoulder. A typical textbook head and shoulders is going to be something like this, inverted head and shoulders, I should say, where price comes up, touches this neckline, and then comes back down and touches the shoulder line. But there are times where I like to try to grab it at this initial hook, which I did here. Came in, got this initial hook, I started buying here, and then I ended up closing out right about here, which, you know, I missed out on 95% of the move, or not 95, but 75% of the actual leg. But that's okay with me. I like to just grab little moves and get out, secure my profits, and walk away for the day. But this overall strength that we ended up seeing from NQ, this was the real, I would say, for me personally, this is the actual market reaction to the unemployment data. All of this softness that we initially coming out of it, this didn't make any sense to me. And then I didn't trade anymore after this, but seeing this big spike to the downside, this didn't make much sense to me either. Why would NQ be wanting to press down so heavily off the back of such strong employment information? It doesn't make any sense to me. And then eventually price rallied. So pretty funky price action this morning, I would say. But in the end, at the end of, you know, we're not even 2 hours into technically New York Stock Exchange session, but this rally makes a lot more sense to me than all of this stuff, this price action here that we have. But relatively quiet morning for me. One trade. Haven't really been looking to get in anything else. Let's check how gold ended up doing following some of this. Now, gold did not do what I was thinking it would do yesterday. This initial pull ended up doing it, I guess, late last night, sort of early this morning in the London session. But what I expected yesterday, and I covered this in the call, is that if we get this dovish tip to the print, this was going to be the best case for gold. My concept behind that, my idea behind that was dollar downside can't be trusted on this print because the potential for recessionary fears to jump in and start propelling the dollar to the upside. So even though the typical reaction function should have been dollar sells, as we saw, the dollar ended up ultimately rallying following this initial drop off. And I expected gold to rally almost the entire time and not do its contrarian to the dollar behavior. Meaning if DXY drops initially, gold should pop to the upside. That's what we saw. But then the dollar reversal, I didn't think would affect gold in a way that would push gold down. I was thinking that the dollar upside would be safe haven flows and that gold would take hold of that same sentiment and continue to rally. So I was wrong on my gold calls yesterday as far as how I thought gold might react, which was a bit of a bummer, but I didn't even trade gold. So hopefully if you traded gold, you protected yourself and you were, you traded it properly and didn't know for leverage and things like that. Let's see where this is at on a macro scale. We're still hanging out. Where's my A1 at? Have a longer term channel marked up somewhere. Here we go. So we do have that sustained move beyond this channel of resistance, which is what I wanted. I didn't want to get involved in any gold buys when we just slightly broke out outside of this channel. Because honestly, this could sort of have just created a new channel that ends up falling down to the bottom of the gold. So I didn't want to get involved here. Now that we've got this nice sustained push outside of this zone, I think gold buys anywhere above these highs are valid. The problem for me with this is targets. Where do you target? I mean, I guess you target nice round numbers like 26 and 27. But it's a little tough, I would say. However, if you can hack it on some of these lower time frames and price can push down maybe back to this resistance level, may have missed the opportunity to get in on that leg, to be honest, but I wouldn't be upset about buying in this zone here. Not a bad price to start trying to get involved in. Now, granted, an even better area would be right in here, stops below some of this structure maybe, and then ride it back out to, again, targets are tough, but I'd say 26, 26.50, and then 27. But this probably isn't something I'm going to entertain too much. It's an idea for you guys that like to trade gold. All right, guys, feel free to drop any questions that you have in the chat, and I'll go through those. As far as the Bank of Japan interest rate decision, I mentioned this yesterday. I'm not going to trade that. I'm not going to pay attention to it. I don't really care. Not that it doesn't matter. Obviously, it matters a lot. But for me, this is just one of those things where it's like I could hang out tonight. For me, it would be technically like 10 p.m., 11 p.m., 12 p.m., 1 a.m., or not 12 p.m., 12 a.m., 1 a.m. The problem with trying to trade the BOJ policy rate and press conference is you never know when they're going to drop it. So I could be up all night and nothing happens. So I'm done for the week at this point. There's going to be more trading for me. Once this drops, then I'll have a good idea of kind of how I feel about the BOJ and what they're doing. Again, I would prefer whatever happens to the yen fundamentally. I would love nothing more than for it to drop down to here. If we could just get another decent opportunity to buy from these lows, that nothing would make me happier. Even if it dips a little bit below this, trying to buy the yen up out of this zone, I think would be, a fantastic move for me for the rest of the year, actually basically all year next year. This is sort of a longer term vision here. Get this head and shoulders. If we have fundamentals lining up with it as well, boom, nice buys out of here. And that looks like the opposite on UJ, obviously. Be looking for sells out of this zone. So crossing my fingers for this trade to start to pan out for us. All right, let's go take a look at, let's go see where the Australian dollar is. Aussie ended up popping up last night after their employment information dropped. One second, gotta refresh myself on what happened here. Okay. Trying to think back to last night. Drop down to the second, it'll jog my memory here. Yes. Okay. So, obviously I have it marked up here. This is exactly the trade I took was a baby trade compared to the move that ended up happening. But we got the employment information that showed we should see some strength out of the Australian dollar. This big up, big spike down. I didn't get involved over here. I didn't like all this price action. It ended up popping down below some of this here and then pop back up. Once it did this leg here, I went ahead and identified my potential left shoulder, and then I waited for price to hit the right shoulder, started buying in right here, and actually closed out at the top of this wick. So certainly, once again, missed out on a big part of the move, but I grabbed what I wanted, hit my targets, and got out. So Aussie is actually still pretty elevated compared to where we started last night. It's a tough spot for the Aussie because of this resistance level that we're at, that we tapped into back in July, again in August, and sort of close to where December's highs were. Still some room to go to tap into that area. But we are kind of stretched to the upside here. So some negative data out of Australia. The way that I tend to like to trade is contrarian to the position if we get the right data. So if we're stretched to the upside, hopefully we get some downside surprises and data coming up. And then that way we have that calibration effect that has to take place within the market. So the Aussie is priced incredibly high. Well, this data shows us that the Australian dollar is actually worth significantly less than what it's trading at right now. So we're going to go ahead and sell high, right? Buy low, or buy our short positions high, sell our short positions low, right? So that's sort of that's what I'm looking for Australian dollar. I would prefer negative data for my scalping opportunities. We'll see if we actually get it. All right, guys. Let's see. I'm not seeing any questions. If you guys want to follow, hit me on Instagram or YouTube at official Nick Phillips, or Twitter at it's Nick Phillips. And you can DM me basically any questions. I tend to try to get back to people relatively quickly. And if I haven't got back to you within like 24 hours, just ping me again and I'll get back to you. From all of us here at A1 show at the A1 Trading Show, have a great rest of your day and a great rest of your week. I will see you guys again next week.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.